You can really make a mess of your general ledger, your chart of accounts, if you do not follow the universals for your balance sheet and income statement. All right, let's dive into this. Let's go over the universals when it comes to general ledger accounts. Your one accounts, your 100s, your 1000s, your 10,000s, or how many digits you use on your general ledger, whether it's 3 digits, 4 digits, 5 digits, whatever it is, that first number, when you see a 1, that means it's an asset. Typically, when you're numbering your asset accounts, you want to order them in order of liquidity. For example, cash is going to be the most liquid item on your balance sheet, followed by accounts receivable, investments, inventory, then getting into non-current assets like fixed assets, intangibles. Now, have the companies I've worked at ordered their general ledger asset accounts in order of liquidity? Definitely not, but it is a good best practice to implement. Your 2 accounts are going to be your liabilities, whether that's 200, 2,000, 20,000, whatever your company uses or whatever you're potentially setting up. 2, you see a number 2 in front of your general ledger account, that is a liability. Another best practice for general ledger accounts in regards to liabilities is to number them in order from current to non-current liabilities, or another way of putting that is which ones are due sooner rather than later. 3 is going to be the equity section of the balance sheet. You'll find items in here that relate to issuing stock or ownership of stock, and also the net accumulated retained earnings of the business. If you've gotten value out of this video so far, please go ahead and smash that like button. We're now going to switch over to the income statement. The first 3 were balance sheet accounts. Now these are income statement accounts. So your 4, if you see a 4, normally that's going to be revenue. Now, you might see cost of goods sold depending on your organization, but typically 4s, when you see that, it's revenue. From here on out, things get a little less consistent, a little less universal, but your 5 to 7s are going to be your operating expenses. I'm not a big fan of using the 6 and the 7s. I like the 5s, and you just stick with the 5s. However, some companies do like using the 6s and 7s to break out the different categories of expense for their financials. Now we're getting even less consistent, less universal. That 7 being in the slide is not a mistake. 7 and 9 are going to be custom usually, depending on your organization, but they're going to be other expenses, other income.